We are seeing some signs at the moment that the kind of composition of inflation is beginning to change. We're seeing some indications that the price of food, the price of services are also beginning to change. And even though inflation is going down a bit, and it's mainly going down because the price of energy is showing signs of beginning to decrease, we're also seeing other goods that are part of how we measure inflation either not go down with the speed we would want, or beginning to show some signs of increasing.
Does that mean that there's going to be less scope for cost of living supports?
So there will be scope for cost of living supports. The exact
less than there has been.
The exact scale of them as part of our budget next year and budgets to come will have to be defined when we get to the winter. But what it does mean is if we're in an environment in which the cost of energy has come down, and we think it has come down between now and the approaching winter, that the level of energy support has to change too. And it's why it was so important that in the recent decisions the government made, we agreed on an exit path out of the significant excise reductions of last year. And we said once we've implemented the current energy credit, we won't make a decision on another one until the budget. So it is about what is happening now between now and the winter, changing those measures that were in place last winter so they're not running throughout the year. And as we approach our budget planning for next year, we'll all have to make a decision on what is the right level of support for our economies.
In that context, how do you feel about ECB rate rises? Are you going to see that consistently?